All right, let's just dive right in and unpack the absolute monumental transition happening right now at India's most valuable company, Reliance Industries. Look, whether you track Asian markets religiously or you're just, fascinated by how giant global conglomerates evolve, what we're looking at here is a literal masterclass in corporate transformation. This is a company that practically built modern Indian industry, and they're currently undergoing the single biggest shift in their entire history. So, at the 2026 annual general meeting, Mukesh Ambani drops this massive update. He basically confirms that his $89 billion empire is officially being handed over to the next generation. Now, for years, market analysts have been hawkishly watching Reliance's succession plans. You see, Ambani himself took over back in 2002 after a really highly publicized, protracted dispute when his own father passed away. So because of that experience, he has clearly made an absolute priority to ensure a smooth, structured, and highly strategic handover to his three kids. To really grasp what this means for the global markets, we're going to break this explainer down into 5 quick parts. First, the empire in transition. Second, their history, going from textiles to tech. Third, how to actually value this giant. Fourth, their massive green energy pivot. And finally, the road ahead. Part 1, an empire in transition, passing the torch. So, the big question is, who exactly is inheriting the day-to-day operations of this beast? Well, Mukesh Ambani has essentially sliced the empire into 3 huge verticals. First up, Akash Ambani is heading the technology and telecom wing through Jio, and he actually just secured board approval for that highly anticipated Jio IPO draft prospectus. Then there's Isha Ambani. She's running consumer and retail, aggressively rolling out this blueprint to build a 1 lakh crore rupee consumer powerhouse by the end of the decade. And finally, the youngest, Anant Ambani. He's taking the reins of the energy businesses, and that means he's managing both the traditional oil-to-chemicals cash cow and their insanely ambitious new energy gigafactories. Now, what's the strategy behind splitting it up like this? At the AGM, Mukesh Ambani told shareholders something really interesting. He said, "They are 3 bodies, 1 soul. Their soul is Reliance." It's a great way to look at it. While the siblings are running their own highly specialized verticals, they aren't stuck in silos. They're working simultaneously toward the holistic growth of the whole Reliance ecosystem. Plus, they've got this robust backup, over 500 young leaders mentored by senior executives, just to make sure the institutional culture stays totally intact. Moving on to part 2, from textiles to tech, a brief history. But hey, before we start looking at the future, we kind of need to understand the sheer scale of what they've already built, right? Because going from a tiny manufacturing unit to an absolute powerhouse, that doesn't just happen overnight. Founded way back in 1958 by Dhirubhai Ambani, Reliance actually started as a synthetic textiles and polyester business. Flash forward to 1977, and their historic IPO literally brought the Indian middle class into the stock market. Through the 80s and 90s, they became the world's largest petrochemical company. But watch what happens in the 2000s. In 2005, they aggressively jump into retail. In 2016, they completely turned the telecom sector upside down by launching Jio's hyper-affordable 4G. And now, in 2026, we're staring at a tech and consumer giant prepping for a massive Jio IPO. The takeaway here, they don't just enter markets, they fundamentally reshape them. Part 3, valuing the giant. Is it a buy? Okay, let's talk numbers and look at how the market is currently valuing this transitioning empire, pulling some fresh data from Trendline. Now, just to make sure we're all on the exact same page, the price to earnings, or PE ratio, is a metric that helps us figure out if a stock is overvalued or undervalued relative to its actual earnings. Basically, it tells you how much you're paying for 1 single rupee of the company's profit. Generally speaking, a lower number compared to its historical average, that's often a signal that it's a good buying opportunity. So let's break down these specific numbers. If you look at Reliance's historical 5-year average PE, it sits right at 26.80, but look at where it is today. The current PE has dropped down to 23.14. And what's even more compelling is the 1-year forward PE, which bakes in analyst estimates for future earnings. That metric drops all the way down to 19.80. So what is this actually telling us? It means the stock is trading at a pretty significant discount compared to how it's normally been valued over the past half-decade. Based on those exact metrics, the trendline analysis suggests that investors are looking at an undervalued stock here, one with some really strong upside potential. Actually, over the last 495 trading days, the stock has spent more than 53% of its time trading below its current standalone PE. So despite the massive lumbering size of this company and the grand scale of this generational handover, the data is strongly suggesting that the market just hasn't fully priced in their future earnings growth yet.
Which brings us to part 4, the green energy pivot. Indian sunshine.
Now, the biggest catalyst for that future upside, and honestly, probably the highest stakes gamble for the entire company's future, is steering this massive conglomerate away from fossil fuels. Make no mistake, this isn't just a simple business shift. It is a massive geopolitical strategy. Mukesh Ambani pointed out that India relies on external sources for over 70% of its energy needs, and that's mostly Middle Eastern oil. That's expensive, and obviously it's highly vulnerable to global instability. So the new vision, which is being spearheaded by Anant Ambani, is to pivot away from that heavy dependence and build a totally new energy empire powered by what they're calling Indian sunshine. The ultimate stated goal here, to make absolutely sure that the nation's future is never held hostage by energy insecurity. And just to really hammer home the sheer scale of this pivot, Anant Ambani announced that these new energy initiatives are going to generate over 200,000 green jobs. Just let that number sink in for a second. 200,000. This is clearly not some pet side project. We are talking about the construction of an entirely new, deeply integrated clean energy ecosystem built entirely from the ground up. Honestly, the infrastructure numbers are almost hard to fathom. Take the Kutch Renewable Energy Hub. It covers 550,000 acres. To put that into perspective, that is roughly 3 times the size of New York City. Just that one single facility is designed to generate 40 billion units of electricity annually. That's about 3% of India's total energy demand right there. And they have broader goals to supply nearly 10% over the next decade. Meanwhile, you have the Jamnagar Giga complex, sprawling across 5,000 acres, which has already pumped out nearly 1 gigawatt of advanced HJT solar modules. That makes them the very first in India to secure critical certifications for that specific advanced tech. And man, they are moving fast. They're targeting the installation of 55 megawatts of solar modules every single day. They're scaling battery energy storage systems to 120 gigawatt hours. And they're specifically focusing on lithium iron phosphate batteries for both utility and mobility use. And they aren't just making empty promises either. They've already locked in a 15-year signed contract with Samsung C&T for green ammonia, and they're targeting 3 million metric tons of green hydrogen by 2032. With commercial revenues from solar modules actually rolling in this year, Anant Ambani confirmed that this whole green empire is going to meaningfully contribute to the company's bottom line by FY27. Finally, part 5, the road ahead, a SWOT analysis. So while all these ambitions are completely staggering, we do need to take a step back and do an objective reality check. Let's look internally first. Reliance obviously boasts totally unmatched scale. Their businesses across energy, telecom, and retail act as these great complementary shock absorbers whenever there's a market downturn. They hold dominant leadership positions across the board, and let's be real, they have a proven, undeniable ability to execute massive projects. But we can't ignore the inherent weaknesses. This is a ridiculously capital-intensive machine. Expanding 5G, rolling out enormous retail infrastructure, and building literal gigafactories requires a staggering amount of cash. On top of that, the incredibly complex structure of a conglomerate this size can really slow down decision-making. And historically, there has been a very deep dependence on its founder, Mukesh Ambani, for overall strategic direction. Now, looking outward at the external factors, they have immense opportunities, for sure. The green energy transition is really just getting started. There is massive potential to monetize the geodigital ecosystem way beyond simple telecom. Think AI, cloud services, fintech, the whole shebang. Plus, the ongoing shift of India's massive unorganized retail sector into organized omni-channel retail, that is an absolute gold mine. Yet the threats are very real too. They operate in sectors that are heavily scrutinized by government regulations. They are facing intense competition from both incredibly agile startups and deep-pocketed global players. And of course, their legacy oil-to-chemicals business is still highly vulnerable to fluctuating crude oil prices and random global economic shocks. And I think that perfectly illustrates the core tension of this whole transition. As Mukesh Ambani steps back, we are left with one critical, defining question to ponder. Can this new generation seamlessly manage the staggering capital intensity and the sprawling complexity of the empire they're inheriting? I mean, they absolutely have the vision, and they certainly have the capital, but execution at this unprecedented scale, that is going to be the ultimate test. Thanks for diving into this explainer with me. Make sure you keep a close eye on those forward PE metrics, because the real work for Reliance's next generation is beginning right now.